credit trapper, helping us get our credit right in 2025 or scale our credit in 2025 so that we can get into home ownership. Okay. All right.
Yeah. Thank you. Great morning. Happy 2025. I like to say this is the year to thrive. So whatever you've been working on, compounding on the last few years, this would be the year where everything starts to make sense. And the thing that I learned called Big Mo starts to take place, which stands for momentum. Just to give you a little bit of background about myself, I used to be a professional hip hop dancer. I did that for about 20 years. I'm a father of two, dealing with a fresh 18-year-old female. Okay. So I got some grays in my beard. You know what I'm saying? Nonetheless, I got fortunate enough, honestly, unfortunate and fortunate enough to go through a major injury in a performance I had. I suffered a bad injury. I couldn't dance, obviously, for about 8 months. And then one of my good friends told me, hey, man, you should go check the spot out to go get your credit right. And you can start utilizing your credit. This is 2016 for me. So before 2016, I was one of the people that said, forget credit, get your cash right, don't use it, budget, and go the slow road. But one thing about being an entrepreneur and running your own show, credit is a way to take you to the next level, period, point blank. And as I go through a few examples, you'll understand how credit can get you a lot further, a lot faster than just saving your hard-earned money. Because unfortunately, we have a thing called Murphy's Committee. Everybody's familiar with Murphy's Law. Anything that can go wrong will go wrong. So he has a committee per level that you're going in your stage of life, where he's going to send one of his committee members to try to knock you off. And that's why I look at when it comes to saving money, when we have emergencies, when we have different things that just happen that are out of our control, all the way from a flat tire to an actual serious illness or something going on with the family, or you might have to stop working to take care of such individual. And now your whole plan is all messed up and you have to dig into your savings. And next thing you know, it's depleted, you're defeated. And it's like, okay, then we got the common saying that was so popular, FML. It used to scratch a chalkboard saying that saying so much, but it really is a real thing when you're going through it. And we all have situations, trials, and tribulations that we went through in our life, right? So moving forward, going through the credit process, I've been scammed, rammed, pause, okay, and all different things when it comes to entrusting people to help me with my credit. The biggest reason why is because I wasn't educated enough. And then I just relied on people's word that they could do X, Y, and Z. And tens of thousands of dollars later, I've come to educate myself and make sure that I can do my part to get in front of those that might not be as aware of how important it is to have self-credit education, right? So I'm on a mission myself to do that for anybody that I come across. I love having open conversations about how you can benefit and how you can move forward on building your credit score. So my brand is, I'm the financial trapper. We trap credit reports, okay? And the biggest thing about me using that for a slogan is so I can really relate with a lot of our people that's in the room, because a lot of us are unfortunate enough to where when we were growing up, words that were despised in my household specifically was budget and credit. Credit was the devil and the budget meant we're broke. That's what I thought. Oh, we can't get that because it ain't in the budget. It ain't, put that back. What you doing grabbing that? Don't grab that Cinnamon Toast Crunch. You better grab the other stuff. Yeah, we can all somewhat relate to that. Or we got to get lesser brand things because it's not in the budget. Or, okay, you might get this, but we can't get that because it's not in the budget. So it's constantly being reminded that budget is equaling, like, that means we don't have money. So as me coming up, I refused to budget. I was like, oh no, budgets for broke people. I'm not doing that. And then come to find out, the most successful companies, the most successful people always have a budget, period. So literally growing up with that stigmatism can really show you how one perspective can be completely off and really deter your upcoming when you come into this life of really doing your own thing and, you know, getting mature and taking on different financial responsibilities. Yeah. So we're going to get into this presentation. With this one, I go through a lot of basics of credit, go a lot of basics with financial literacy. So we're going to start right off the back. You can space bar for me. Perfect. So right out the back, right? Budgeting, right? Income, expenses, liabilities, assets, envelope systems. We're going to cover those things. So the most important part about your budget is that you're telling your money what to do. I don't care what amount it is, from $50 to $5,000, $10,000, $20,000, $30,000, whatever the biggest lump sum is you have received. Do you already have a plan for it? Because if you don't have a plan for it, it's going to have a plan for you, and it's called where did it go? We've all been there. Where did it go? You got to, oh man, I worked a lot of hours, or I closed a lot of deals. I'm going to get a fat paycheck. I'm going to get a fat commission check. Oh, it's up. Next thing you know, you get that money, but you didn't plan on what to do with it. And 3, 4, 5 days later, if you're lucky, 2 weeks later, you look back like, what did I do with that? Where did it go? Dang, I don't got nothing to show for. And this cycle happens for years, okay? Years, right? Like I said, growing up, not understanding the concept of telling your money what to do, and your parents just saying, oh, we got a budget, and not even having a full explanation on why that's so key, because you're in a household of where you're probably struggling like I was, right? So it's real important to always tell your money what to do. What are your expenses? How much is your rent? How much is your car note? How much are your utilities, the power? How much are your subscriptions now? Subscriptions is going crazy these days. So what are your subscriptions per month? Do you have the Hulu Live? Do you have YouTube TV, which is outrageous? Do you have Netflix? Do you have, what are some other ones? Do you have Amazon Prime? Okay, it's been times where that $14.99 might come at a bad time. Overdraft your account. Ooh, come on now. Come on. Subscribing to all them little apps. Okay, you got the kids. They got you on Minecraft, Roblox. Talk to me. Okay. Some of y'all might know about V-Bucks. Okay. And VC if you got 2K players. Okay. Talk to them. So next slide for me, please. So it's really understanding about how to really break those things down. And this is what I call the envelope system. The envelope system is probably as old as a test of time. I'm pretty sure this system goes back to probably over 200 plus years. So what's important about the envelope system? You have 5 basic categories, right? Number 1, bills. Number 2, savings. Number 3, investing. Number 4, spending. Number 5, giving, tithing, okay? Either or. So bills, 50%. Like I said, whatever money comes in, 50% is going into that envelope, no matter what. 50%, right? 20% of savings. So once again, you get $1,000, $500 is going into the bills, $200 is going into the savings, $100 is going into investing, $100 into spending, and $100 into giving. Now, if you want to switch it up, you can put 5% on giving and add an extra 15% to the investing, right? So what's going to happen over a compound? Like I just told you earlier, this is the year to thrive. If you've been following a system like this, those envelopes are going to eventually get fat. They're going to be obese. Okay? And so a prime example, right? With savings. When it comes to having a certain amount of your savings, you just don't want to take that money and just put it in a savings account. Your savings account is not going to really grow your money for you. You want to try to put it in a basic account that's going to yield about, even if it's 5%, okay, 5% a month, 5% a year, that's way more than a traditional savings account. So now you're working on letting your money work for you. Once you allow your money to work for you, money has no emotions, money has no kids, money has no relationship issues, okay, money doesn't sleep. So now something's going to outwork and then potentially work for you, yes? With the investing, what I like to say is if you don't have a business to invest in, or if you're not stock savvy, because when we think about investing, stocks, real estate, Toro, we think about all these things, but what about yourself? How are you investing in your self-education to become more, to reach a 5-figure monthly earner, a 6-figure monthly earner? What are you doing to invest in yourself? And we're not talking about registering to go get your degree. We're talking about a skill set. Do you know how to sell? Do you know how the psychology of how humans work, right? Do you understand what's hot right now? And how can you get better at finding out that information? How many of these events do you guys plan to go to moving forward to get better at whatever it is that you're going for? Because there's things like this happening every single weekend. It's just, are you in the community to know about it? And do you have the money to pay to get that extra education? Because you can come in here for a whole 2 hours and one thing can make a change in your whole life. One thing. So, investing, spending. Ooh, this is probably one of our worst enemies. Ha! Who knows when their birthday's coming up? Who knows when your kids, brother, sister, mom, anniversary, Christmas. Christmas is what? 11 months away, right? In some days. That means, what's your budget for Christmas this year? What is it? 1,000, 2,000? Some people might say, man, I spent about 5,000, 6,000. Okay, if that's the case, what does that mean? You have to divide that by however much time you have before that day comes, and you want to divide that by that amount. So if you have 11 months and you say it's going to be 5,000, right? How much do you need to have set to the side every single month to add up to that amount, right? Simple math. We'll just do 10 months. $500. That means you're setting aside every single month from January to November. Okay, you don't want to be me last minute, go get gifts on the 22nd. Okay. So by the time November comes, you now have $4,500 to $5,000 specifically for Christmas. How much now is it simpler on your stress level to not say, okay, when I get paid, I'm going to go get all this. But what about everything else that you're taking care of? So now we run into a hard place where now we got to run into, man, we sacrificing for stuff our kids or family members aren't even grateful for. Because they only going to deal with whatever they're dealing with for maybe 3 months, and then it's old news. If you got kids, you know what I'm talking about. Okay? In with the old, out with the new. 2 weeks later, a new commercial, a new ad on these different social media show up. Oh, can we get this? I just spent X. They don't understand, right? So you don't want to put yourself in that situation. Same if you have a vacation coming up. What's the budget for that? If you know you're going somewhere in July, do not be the one saying, oh, I get extra hours and I'm going to take this whole check and go to that vacation. Does that make sense? When you have that money, even if it's halfway, even if you have half of what that goal is, you are going to feel so much less pressure on yourself. And that's where the growth starts, where you discipline your spending habits. That's the biggest issue why our credit gets away. It's the biggest issue how we fall behind, excluding any crazy like emergencies like I was talking about, where your financial habits have to be in order. It's literally our habits. It's what we're doing when we touch the money. When we know we're getting this money, we get this specific like energy, like, ooh, yeah, girl. Yeah, dog. Hey, how many bottles we grabbing? Knowing, absolutely not, because you have things that you need to take care of. Everybody in here has more important things to go smoke a hookah and pitch in on a bottle. I guarantee it. We can go down the line. And if you don't, then that means you are on a whole nother level, okay? Which most of us are in here grinding to get better, yes? When it comes to the giving, tithing, you're basically keeping your hand open, right? If our hand is open, we can now give, but guess what? Now we can 10 times receive even more versus clenching. If it's $20, $20 can do a lot for people out here today. A basic meal, some socks, drawers, right? Feminine products, male products that you need, lotions, little things. Like, we don't have to be so vibrant and big about how we need to give. It's just little by little, right? Compound, growing each step. Yes. So bills, plain and simple, know what your bills are. Necessities. What do I need to have to function? I need a roof. I need power, right? I need food. I need gas for your transportation, or whatever the budget is for those that might Uber and don't have a car. What is that? Those are your bills. Okay. Not that clothes are not necessity. We have them. We got stuff in the closet right now that none of us has touched, in over a few years. I promise. By looking at some of y'all style, I know y'all got gear that y'all don't touch. If y'all anything like my aunt, my mom, my grandma, okay, I'm like, when's the last time you wore this? This is like from 95. I found some of my mom's closet from 95. We're 24 right now at 2024. So that's not even an issue, but we want to keep up. We want to keep up with the Joneses. Don't do it. Don't do it. But we all go through it. And that experience is key. Remember this, experience is not only the best teacher, but it's also the meanest. Experience does not care about your feelings, but it's important to learn from those mistakes that we made. Spacebar, please. Any questions on the envelopes? Any questions? Yeah, you can get those from Walgreens, Walmart, basic envelopes. They don't have to be nothing crazy fancy. You write them down 50%, 20% each percentage. And every time you bring money home, distribute those into each envelope. So now you can be even just more prepared and on top of things. Okay. So, yes, while we're here, credit, right? Everybody's obviously familiar with what credit is, what it does. Yes? Everybody's pretty clear on that? Okay, so we have our credit report. We have the adult report card. I coined that as the data points that you need to get approved for whatever you desire. Mortgage, credit cards, dream car, business loans. Those are pretty much like the main categories that I can think of. Mortgage, dream car, more money, which goes in with credit cards and business funding, things of that nature, right? Then we have debit card versus the credit card. Next slide. Perfect. So now, how often, who in here checks their credit report at least once a month? Oh, I love it. Oh, this is great. Beautiful. Yes, that's amazing. So now, who knows how to accurately read their credit report? As in, are you looking at what's inaccurate, what's not yours, how many misspelled names are still on there? Okay, if you have more than one name on each bureau, that's an inaccuracy. That needs to be removed. If how your name is on your credit report isn't how you sign for things, it needs to be removed. Does your birthday year all match up between all three bureaus? Right? Addresses. How many people in here still have addresses that you no longer live at? Show of hands. Yes, okay. That's how most things are sticking to you because we'll have addresses from 10 years ago still on our report, right? So if ever dealing with any type of derogatory, any type of charge-offs, any type of collections, they can verify the debt just by that old address that you don't basically get mail sent to you anymore, right? So you want to have one address only that matches on all three credit bureaus that you personally deal with. The address does not have to match your driver's license. It just needs to be current with your utility bills. Make sense? So whatever that power bill, cell phone, insurance says, that's what needs to match with your credit report. Going down on your hard inquiries. Hard inquiries are going to show different things as well. We'll get into that in a second. Now, when you go look at an account, you got your Capital One. Anybody that has Santander as a lender, we need to talk. They are the worst lenders in the car business. Period. That means we will get you in something and tax you. That interest rate is terrible, right? You'll get approved for a $20,000 car, 60-month loan, and now that $20,000 car is turned into probably $55,000 if you pay it off, which I never recommend people to do if you want to keep solid primaries, but we'll get into that, right? So if you have Santander anywhere, that means you should just back away and come see me. Okay. Don't do it unless it's life or death. All right. I understand everybody's situation is different, but just have a plan to excel and not be stuck in that situation and really understand who are good lenders and who are bad lenders. Right. Which I'm sure Austin can relate with looking at mortgages. Cause I'm sure there's lenders that are just like, we take anybody, but we're going to hit them. Right. Yeah. So we don't want to deal with that. So looking at that report, is the amount correct, right? With that specific primary. So if you have a Capital One credit card, if you have student loans, are these numbers all matching up for it to be accurate and verifiable? All the bureaus must match everything from a date to the loan amount to the last time it was reported, date last reported. Everything needs to be in sync. If it's not, that's called unverifiable, inaccurate. And if it's a negative, we can get that up out of there because now you're reporting inaccurate, unverifiable data to my report. By consumer law, you're violating my rights. This no longer needs to be on my report. Okay. So that's how you basically want to look at your credit report when it comes to looking at things on there. All right, the adult report card. The reason why I coined this is because we have 6 categories. Like Austin was talking about, payment history, right? We have credit card utilization, our usage. You have derogatory marks / collections. You have age of credit. You have total accounts, mixed accounts, and you have hard inquiries. That's 6 classes. This example, payment history 100%, credit card utilization 6%, derogatory or collections 0, age of credit I just say at least 5 years plus, total mixed accounts that you have open and active and positive 17, hard inquiries 2, you want 0, right? This example right here will get you approved for 50 to 150,000 in business funding. This is like the perfect scenario right here, right? Like this, you can get in any. if you come to Austin with this, it's oh wow, right? Right? It's a slam dunk, right? So this is what you strive for if you really want to go top tier. This is like A plus. I'm an A plus student. I'm taking AP classes. This is that, right? So now, like Austin was talking about, the two most categories: payment history, credit card utilization. Like he said, 65% of your score. If a late payment reports to the credit bureaus from the creditor or the lender, that's going to knock off 35% of your credit score. It does not matter if it's $100 bill to a $5,000 bill. If that company reports to the credit bureaus that you were late once, your score is dropping 35%. If you're in the repair process, the cleaning process, you just knocked yourself back, guaranteed 3 to 6 months. Typically is what it takes, unless you're dealing with people that's going to do some shady stuff and is going to come back on your report anyway, right? So you just want to make sure that you understand the importance of that and to avoid any late payments. Remember, these lenders and people that you have credit with, power bill, credit cards, car note, anything of that nature that you took a loan out on something, even if it's at a RC Willey, right, or furniture store. If you know you're going through something, call, and communicate. What we don't do. I was taught to run, just avoid it. Just act like it's not there. I don't see it, right? That's going to mess up the process because now you're going to get consistent late payments. And then when it's time for you to go talk to Austin, you're so far behind with late payments. Now you have to retrain your habits when you come talk to someone like me. That's like, okay, we got to work together because we, as people that clean up credit, we cannot do everything and you continue to be the same. It's not going to work. It's like, I'm trying to lose weight, but I'm still going to go eat at Burger King 3 times a day, but I'm really going to go lose weight. You're contradicting yourself, right? So you don't want to do that when it comes to getting your credit in order. So you really, once again, communicate, hey, I'm going through X, Y, Z. Now, when it comes to talking to people, when it comes to talking to Capital One, when it comes to talking to any of these banks, any credit unions that might have approved your loan, remember you're speaking to a human. So far, we haven't got to AIs just yet when it's time to go talk to the accounting department. And they're going to understand human to human that you're dealing with something. And they will be willing to work with you because they don't want to what? Lose your business. They don't want to send you to the debt department where people have to chase you all day and then sell your debt off. And now the collection company's calling you trying to sound like they're your best friend from 10 years ago. right? You don't want to deal with that. So communicate. We all have life. Murphy's committee. Just let them know when it's something that's already happened. Let's say you already did something a couple months ago before you came in here. We're gonna get on the phone with them and explain to them why something's going wrong. People can still use the COVID-19 Rona, right? That was the Rona. I don't know where that went. That came and gone quick, but nonetheless, that term at least people are still using that on why they're behind is what I'm getting at, and they're going to understand because it was a massive impact on the world, right? So you can still use that. If it's not true, you can still use that as them understanding to get you to the next step, right? It's not about, is this really what happened? It's about, can you really explain to them a story that's going to get them to buy to help you out versus just completely ignoring it and hopefully it just goes away, right? We don't want to do that. We want to make sure we clean up any mess that was spilled. Yes. So that's with payment history, credit card utilization, the standard 30%. I tell all my clients shoot for 20 or below. That means if you have a credit card for $1,000, you want to show that you still have $800 available to use and you only spent $200 of it, right? Credit cards are extremely tricky. They're extremely tricky because to get more of a credit limit, they want to see you use more, right? But if you don't use it because you want to be good, I don't want to use the credit card unless it's for emergencies, then they're going to cut your limit if you're not using it. If you have a credit card right now for $10,000, $5,000 and you're not using it, they will cut it in half and give that half to somebody else that needs it, right? So you always want to make sure that you keep your utilization low. Who in here pays on the statement and reporting date versus the due date of your credit card? Show of hands. Oh yeah, this is beautiful. The reporting date, statement date, either or. You'll find it on your documents when you look on your when it says statement date, your statement of December 2024. When you open that up and go in there, it's gonna say statement date or reporting date. That is the date that they report to the credit bureaus how much utilization you've been using on the credit card. If you wait till the due date to pay it down to where you're below the 30%, it's already too late because they're going to show on January that you were over 30% because you waited for the due date. The due date is a scam. Do not follow the due date. That is how the credit card companies eat off the interest. Because when you make that minimum, none of that's maybe a couple bucks is going to the principal, but everything's going to the interest. And that's how they take advantage of people that aren't aware that just, it's due here, due there. Okay. But when it reports, that has nothing to do with the due date. That's the true due date, is a statement or reporting date. So look that up. If you need help finding that, let me know. We can locate it, right? So that's what they're going to report your utilization is every single month. So whatever your statement date was in December and you are 50, 60%, because it's like, I'm going to pay it down next pay period. My due date is the 29th. Well, that reporting date was probably the 21st. So now, come January, when you look at that credit report, your utilization is going to show that it's over 50%. You're like, well, how is that? Because you're paying attention to the due date. So don't pay attention to the due date. That's how they get you real good with the credit card utilization. When it comes to budgeting, if your cards are over, right, you max them out. The beautiful thing I tell my clients, when you pay on the credit card, you get to use it again. But now when you use it, you have to make sure that your budget doesn't exceed how much money you're putting on it. So therefore, if I get paid $2,000 every 2 weeks, I'm gonna put that, and my card is maxed out of $4,000. I'm taking that whole 2,000 and putting it on my credit card, and then I'm gonna use my credit card to take care of the necessities, and then I'm gonna tell myself chill out on the excess things that I don't need, because I have to what? Habits, change them, right? You're not going to spend more than what you're putting on the credit card. That's how you buy it down. And by you buying it down and using it, now that 4,000 can go all the way up to 20.